Welcome to RAIN, the Real Estate Investor Growth Network with your hostess, Josey. Join like-minded real estate investors and accelerate your business towards greatness. You will hear step-by-step strategies for success, interviews with real estate rock stars, and we will dig deep into past projects where we bear it all, including the good, the bad, and some just plain ugly. So get excited. Here's the bestower of badassery herself, the real Josey. Listener discretion is advised.
Hi, and welcome back. I'm Josey, creator of RAIN, the Real Estate Investor Growth Network. Whoop, whoop. On today's episode, we have a guest that will be sharing their badassery. But before we begin, here's today's badassery bestowment, my little badass gift to you. Today's topic is the importance of working with investor-friendly realtors. RAIN Nation, let's get something straight. Not all realtors are created equal, and if you're an investor, you do not have the time to educate your agent while you're trying to lock up deals. An investor-friendly agent isn't just someone with a license, they're a deal partner. They speak your language, they move fast, and they protect your profit. Here are 5 reasons why you should work with an investor-friendly realtor. Number 1, they understand investor math, not just pretty houses. They understand after repair value, repair costs, holding cost, rent comps, and margins. You're not out there shopping for crown molding. You're buying numbers that work. Number 2, they can spot deals faster and get you in the door. Investor-friendly agents know what to look for and how to move. They're watching for price drops, expired listings, and off-market whispers, and they help you see opportunity where other buyers might see ew. Number 3, they know how to write offers that actually get accepted. Creative terms, escalation strategies, clean timelines, strong communication. This is where deals are won. A good investor agent helps you compete without getting emotional or overpaying. Number 4, and my favorite, they have the right network on speed dial. Inspectors, contractors, lenders, attorneys, property managers, photographers, handymen, staging companies. An investor-friendly realtor is basically a walking referral machine. That network saves you time, money, and a whole lot of headaches. And number 5, they protect you from rookie mistakes and costly surprises. They'll point out the red flags like zoning quirks, appraisal issues, weird disclosures, and neighborhood trends before you're already under contract and stressed about it. They help you stay strategic instead of reactive. So, RAIN Nation, here's the bottom line. The right realtor doesn't just open doors, they reveal opportunities. If your agent is slow, confused by your strategy, or constantly trying to talk you out of being an investor, that's not a partner, that's a bottleneck. Find the investor-friendly realtor who moves like you move. Fast, smart, numbers first, and watch how much quicker your badass business grows. Now, on to today's episode of the Real Estate Investor Growth Network podcast. Today's guest is Michael Holshouser with Linville Team Partners, an investment team focused on helping accredited investors participate in commercial real estate deals with more clarity, transparency, and support. Michael and his team has built the Linville Team Partner investment platform after hearing the same thing over and over. I want to invest in real estate, but I don't know where to start, who to trust, or how to evaluate deals. So they created a private investor portal where you can review opportunities deal by deal, invest at your own pace, and actually understand the numbers without being locked into a fund or left to figure it out alone. And the results speak. In just a year, they've built a portal with 100 plus accredited investors, closed $50 million in deals in 2025, and are trending towards $40 million plus in assets under management. Today, we're digging into why commercial real estate can be such a powerful wealth vehicle, how it can hedge against inflation, what underwriting really looks like behind the scenes, and what it takes to build real trust with investors, beyond just returns. It's my pleasure to have him on the show. So welcome, Michael Holshouser. Welcome.
Hey, Jen, how are you doing today?
That applause. They are thrilled to have you on here, Michael. And I just found out you are about an hour and a half away from me. I'm in Raleigh. You're in Winston-Salem. Lovely area. So it is a pleasure to have you on the show. So anyone meeting you for the first time, tell us who you are. What does the Linville Team Partners focus on? And let's just break it open here.
Sure. Well, thanks. First of all, thanks for having me on your show today. I'm really excited to get to spend some time together and talk about what we're building here at Linville Team Partners, and appreciate your graciousness in having us and letting us share our story a little bit. So Linville Team Partners is a traditional commercial real estate brokerage firm that started about 15 years ago. It was founded here in Winston-Salem, North Carolina, and still remains here today. And over the years, just through evolution of trying to solve problems for our clients and getting feedback from clients on what was important to them, the business has continued to grow and evolve. And one of the things that came from that was this investment platform that you just mentioned so kindly and graciously. And that's really where I can come in, and what I've been working on for the last year and a half is helping to build out a really kind of straightforward, simple, clarifying, or a lot of clarity around how people who are interested in commercial real estate can invest as a passive investor with kind of institutional knowledge, institutional property management, and really not have to go through the whole process by themselves and not know whether they're investing in the right market or the right cycle or the right asset class. And that's where our experience and background really comes in to kind of take all of that off of the plate of an individual investor and allows them to kind of piggyback on our market knowledge and experience and participate in some really exciting projects.
I love that you explain it that way. And it is an industry where investing in commercial properties, it can be very confusing for the investor. So you are looking for accredited investors. First of all, explain what an accredited investor is.
Sure. An accredited investor, there's really a couple of ways to qualify. It's personal net worth criteria. And the way the SEC defines that is you have a $1 million net worth individually, not including the value of your personal residence. So take your primary residence, the value of it and the debt associated with it, take that out of the picture. Any other assets you have, brokerage accounts, vehicles, investment properties, etc., all of that stuff, the total value of those less the debt that's associated with it needs to be $1 million or greater. That's one way to qualify. Or the second criteria is an income-based criteria. And as an individual, it's having $200,000 of income each of the last 2 years. Or if you're married, filing jointly, it's a combination of $300,000. Now, I'm not the expert in the SEC's criteria, but they have come out and provided some additional guidance that folks can now self-certify. So basically, you as a potential investor could write us a letter saying that you are validating and verifying that you're an accredited investor. And based on the SEC's current guidance, we're allowed to accept that. Typically, what most people do is they have their CPA, their financial advisor, or their attorney validate and sign off on an accreditation letter. And we receive that and we log that into our investor portal. And that's how we validate and verify that folks are able to participate in these investment opportunities.
Michael, I think that by far was the best explanation I have heard anyone talk about accredited investors. So thank you for saying it so eloquently. I love that.
Happy to help.
Yes. So a lot of people out there, they see, just plain Janes that are working for the man, doing the thing, and they see how wealth is created through investments. And the number one thing that people know that makes them money is going to be real estate. People look at the stock market and stuff like that because it's so volatile, it goes up and down. But with real estate, you have a little bit more control over it. But I love how you kind of solved a problem by creating this portal for investors. So what exactly, is there a lot of hand holding going on? Because it can be so confusing. And I loved hearing what you're based on educating the people and just making a very seamless investment for them so they really understand what they're doing. So what does that look like for an accredited investor that wants to be part of the Linville Partners?
Sure. Let me kind of walk you through kind of big picture what we're doing and how we're going about doing it. So typical syndicators, fund managers, et cetera, they kind of go out and they ask people that have, normal jobs that maybe have some excess cash flow that want to get into real estate.
Well,
Hey,
hold
we'd
on.
love for you to.
Tell us what a syndicator is.
All right. So a syndicator is someone who goes out and finds a property or a project
Like me.
that they get control of.
Yep.
Okay. They negotiate terms through brokers or with the seller. And then they go out to family, friends, their extended network, and they raise money from those folks. So we're syndicating and pulling together several people's funds, their dollars, to help afford to buy that property or that project. So some people do that regularly, consistently, but it may not be a scalable platform. It may not be something that is explained very well. And just depending on how you go about that process can really impact your success, your ability to repeat that over and over and over again. And one of our primary goals was to be able to create something that is consistent and scalable and very easy to understand. So part of our job in that is we kind of naturally started with family, friends, our close network, existing clients, and really the two partners that I work with, Aubrey Linville and Nick Gonzalez here at Linville team, they kept kind of getting the same question from their clients. They were investing in their own projects. Aubrey owns some properties, Nick owns some properties, and their clients will say, well, hey, the next time you guys find an opportunity, we'd love to invest alongside of you. And instead of going out and doing a new LLC and having 50 partnerships with 50 different people, we really decided that the best way to do this was kind of bring it in-house under the Linville team umbrella and then go out and work with existing clients, build the investor database, and bring opportunities as they come about to that group, and then give them the opportunity to decide whether or not they wanted to participate in a specific project. So that's where we're a little different. Through our platform, our investor portal, which is hosted by Avestor, we were able to create a customizable fund, which is separate from or unique from a traditional fund that's like a blind pool of money. So the normal scenario would be, hey, Jen, you've got $100,000 you'd like to invest in real estate. Send us that money, and then over the next 6 months to a year, we'll let you know what we spent your money on. Like what we may tell you it was industrial, may tell you it was retail, but you don't know on the front end. You're trusting us as sponsors, as the managers of that money, to go out and spend it wisely. That didn't feel like the way we wanted to go about building our business. So we were able to find a way to do a customizable fund, which allows us to work with investors. So what we would do different than that normal fund manager is come to you and say, hey, Jen, here is the exact opportunity we have before us. It's in Winston-Salem, North Carolina. It's a 30,000 square foot retail building. It's 2 tenants. Here's everything about the deal. Here's the good, bad, and the ugly. Here's why we like it. Here's our risks that are associated with it. Here's how we're going to mitigate those risks. Is this something specifically that you'd like to invest in? And so that's the extra layer of transparency that we are offering and providing that a lot of typical syndicators and fund managers don't, because they have what's more of a kind of a blind pool or blind fund where you're trusting them to execute on that vision, but you don't really get any input as to whether you participate in deal 1, 2, 3, or 4. Your money could be spread out all across each of those 4 properties, and you don't really know where they're going to buy or what they're going to buy.
Well, I like that because as an investor, I want to know where my money's going, number one. But I also want to just blast it from the rooftops and be like, look at what my money is doing for me. So I feel like that just kind of sets it up for the person who maybe had some money left to them from a will, or by the way, can you do 1031 exchanges?
We can. I will say that's a whole separate animal, but we have investors who have invested individually through a single member LLC, multi-member LLC, through self-directed IRAs, through revocable trust, irrevocable trust, generational skipping trust. The way the 1031 funds can work is you can participate in our platform, our fund, through a TIC interest. So just kind of walk through that. That's tenants in common. And what happens is if you have sold a property and want to roll over funds via 1031, you would come into the deal alongside of our partnership and would be a co-owner on the deed.
Wow.
So you actually, your whatever entity you sold the previous property from becomes a new partial owner of the next property we would buy. So Linville Team LLC or Linville Team Property One would be a co-owner with Josey LLC at whatever interest of equity you had rolled over for 1031.
Oh,
So
fair.
it's not the most straightforward. And I would say for first-time investors, that's probably, something you need to fully understand how that works. But we have accommodated several 1031 investors to roll alongside of us via that TIC interest.
Thank you for explaining that. And I want to just touch on the self-directed IRAs, because if somebody is leaving one corporate America job and going to another corporate America job, just an example, and before they transfer their 401k from the previous job, I always recommend to family and friends and say, why don't you put in a self-directed IRA so that you have more control over how that money is invested? And in this situation, say the person's only 40 years old. If they park that self-directed IRA with you, it's going to grow a lot faster than if it's with somebody who is investing it in the stock market. Again, very volatile, up and down, all over the place. So it's a little bit more educated returns, predictable returns, I guess would be a better term. But the money, the profit that they get from investing goes back into that self-directed IRA. So that's kind of a little bit of a longer game, but that's your retirement account. And then it's there and it's going in, there's all these tax benefits to it. So, I'm just saying this for the listeners, if this is a great way to park your money. So I want to go back to this platform for a second here, Michael. And you say that your platform makes things simpler, but what do you refuse to oversimplify because it really does matter? What's something really important that you can't dumb it down because it is a very important aspect of it?
Well, I think a big part of that, and I hope where you're leading me, is the underwriting that goes along with each of these opportunities. Yes. So that's a big part of what I do. My background is in commercial banking. I worked in banking, 2 large regional banks for the last 20 plus years and did a lot of commercial real estate financing. So had exposure to that side of it. And now primarily what I'm doing is helping the team source projects, spending a lot of time underwriting and analyzing the project. So that when you say underwriting, or when I think about underwriting, the cash flow or the lease terms that are in place are a big part of that. But it's also looking at what's happening in the market, the specific market we're looking in. How does that property know if the tenant happens to leave? Are we buying at a price per square foot that is above market? Is it below market? Can we replace the current tenant's cash flow and their lease terms at greater future lease rates? Or are we going to have to back up? There's a lot that goes into that, but environmental due diligence, survey issues can pop up. So when I say underwriting, there's a whole big circle or umbrella that's falling within, the cash flow being kind of at the forefront of that. But there's a lot of other things, part of the due diligence process, that go into that as well.
Well, I know a lot of investors who want to get into multifamily, and they do exactly what you said in the beginning, where they get a property and then they want to syndicate and pool investors together. You are organizing all that. You all are finding the deals, and then you're keeping it above board that way. But for the investor who is just getting into purchasing commercial properties, this is kind of off topic here from Linville Partners, but if it's, what are the top things that they should look for? And are there any big rookie mistakes that you've seen that they should absolutely avoid?
Well, I will say I got my own personal investing start back in 2007, buying single family residential homes from the courthouse through the foreclosure process, anywhere I could find them, as a mid 20-year-old, and afford to pay for them. But I mean, candidly, a lot of mistakes happen early on. So I would say starting small and not risking more than you're comfortable risking or can afford to potentially lose is the first baby step. Is figure out what your own personal financial situation looks like and dedicate a portion of your available cash flow, your nest egg that you've saved up, to go out and be I won't say adventurous, but be willing to take a chance on investing in real estate. The thing for me that I learned very early on is if you're talking about single family homes or small apartment duplexes, triplexes, small apartment communities, those things, some people feel like they can self-manage. That part of it is probably the biggest like aha moment I had, was how time intensive that can be. It can be very financially rewarding to take a property, especially if it's one that you've had to refurbish or do capital improvements to, that have created value along the way. But you have to know what you're getting yourself into. And that comes from the number of tenants you're dealing with. If you talk about, let's say, a 20 unit multifamily property, that means you've got 20 tenants to deal with. You've got probably 40 toilets, 40 showers, 40 doors, a lot of windows, a lot of things that can go wrong. And so if you don't have a network of vendors, you talked about this early on, kind of that investor friendly realtor in their network. If you don't have access to that, that is where a lot of people I've seen in my career go wrong, is they weren't prepared for what it meant once they actually bought the property. So knowing what you're getting yourself into and educating yourself and having a network of contractors or brokers or property managers is a great place to start. And I will say, just as for my own personal experience, again, taking your time on the front end to understand what value you're buying at and what value you can create. I've made the most money, so to speak, always on buying a property right, and not in hoping that just appreciation over time happens or that I get lucky and time it right. So buying it right is where you're going to, in theory, make your most money, in my opinion.
Yes. And I will tack onto that. And the property management portion of that is so important, because they can either make or break your whole investment. And I learned that the hard way with a 12 unit. And that's just one aspect for me personally. But going back to you, Michael, what are some red flags that make you immediately walk away from a deal?
That is a great question. We pride ourselves on being creative problem solvers. So we probably, as we're evaluating any opportunity that we come across, probably are willing to dig in deeper and roll our sleeves up a little more than most, because that's also where, if we can figure out the right way to mitigate a risk that other people may not be willing to take, we can create the most value. So I will say we dig in pretty deep on things, even though it may have a little hair on it. I will say the things that typically pop up and are just kind of like the immediate red flags or the alarm start sounding are properties that are located near gas stations, properties that are located near dry cleaners, things that you know are going to have environmental concerns or possibility for issues. There's just certain things that go along with that. If there's been groundwater contamination, you may be limited in what your future redevelopment of that site may be. So if you may have a great location that you thought would be a good opportunity to redevelop into multifamily or residential, and because there was a gas station 3 buildings over that had groundwater contamination, your site is precluded from ever doing residential or multifamily development on it. So things like that are going to really box you in or give you less flexibility once you own the property are probably the biggest things that I think pop up. When we are buying single tenant deals, whether that's industrial or retail, we want to be able to understand as much about the tenant and their financial performance, their longevity, their ownership, how they look on paper. So the lease in and of itself is important, but what the ability of that tenant to continue to pay that lease or to survive long term is very critical in how we evaluate opportunities.
I never thought of that. My 12 unit is right around the corner from a gas station. We didn't have soil contamination, and mine was the furthest away, but still very interesting aspect. I also hear a lot about water lines and how if you have to, scope the sewer line, or do like that's one step that you never ever skip when you are doing your inspection of these properties. But I am curious, Michael, can you share a case study, like a particular deal that you are especially proud of?
I can. I've got one that we were able to close within our fund last year. And I would say it was a great example of a true win-win situation. And we're very transparent in our communication with our investors. We're very transparent in our communication with potential sellers of properties. In this particular case was a sell leaseback transaction. And I'll explain that real quick for those who may not be familiar. So what the seller, it's a furniture retailer. They have a retail store, they have a warehouse, and they had a couple of locations. They wanted to basically sell the property, take the proceeds from the sale of that property and reinvest it into their business. So instead of going out and borrowing the money or just slowly building cash flow and taking that to reinvest in their business, they had a fair amount of equity in the property. So if they sold it, they would have a cash infusion, which they could in turn reinvest in their business. And in exchange for that, they would sign a long-term lease that then we as owners of the property would be the beneficiary of that cash flow over that long-term lease. So they were offering a 15-year lease. We bought the property, and it was really a scenario where throughout the negotiation, they had several offers on the table previously and weren't able to execute. We got in there and really spent some time with the owners of the business to figure out not only what their short-term goals were, but more their long-term goals. And we were able to structure a transaction where we acquired the properties, but also got the owner of the business to reinvest and participate in our real estate entity as an investor.
Wow.
So now we have a deal that is a long-term lease with a company whose balance sheet has been cleaned up, and the owner of that furniture company is an investor in our deal alongside of us. So all of our interests are mutually aligned. And so that was really the big selling point for us and our investors, is like, look, we're creating a win-win solution. The owner's so compelled by what we're telling him and the partnership we can create that he's willing to put some of his profit and proceeds back into the deal and remain an owner in the real estate as well.
Wow. Excuse me. I have someone who popped into my brain that would be a great fit for your company. She owns a brewery here in Raleigh, and she has been looking to stop paying rent and get a place larger. And if she could have the opportunity to also be an investor, oh my God, I'm going to have to tell you about that. I'm going to have to connect you two as soon as we're done here.
Do.
So, but back to investors that you are looking for, these accredited investors, getting away from the actual deals and stuff, but just the person who's investing with you. What is a misconception they have when they compare like real estate returns with the stock market? Because I have mentioned it a couple times, but can you go into detail a little bit more and make it a little bit easier to understand why it's better to invest in real estate as compared to the stock market?
Yeah, I've got a lot of friends who are financial advisors and stockbrokers, and they have a little bit of my money. And I think diversification as a whole is always a good plan. So I'll start there.
Good, smart.
My preference for real estate has always come from the idea that I have some control over the performance of that asset. If I'm buying Walmart or Coca-Cola or any other Fortune 500 company stock, they don't care what I think about their operations. They're not asking my opinion about what they do next. With real estate, typically there's some impact that we can have as investors or owners or whatever role we play with that property, where we can impact the return and the outcome. We can do capital improvements that add value. We can find a new tenant that may be able to pay us a higher lease rate. We can, time as market conditions allow for, we can pick and choose when we, sell the property to maximize our return. So I think the level of control investing in real estate is always higher to me than just investing in a company that we have no input or control of. Specific to our investors, I think one of the things that has been really appealing, it was appealing to me personally as an investor in this as well, is that the type of deals we're buying are kind of in a sweet spot, I'd say above the price point and level that individual investors are typically able to afford, and below the level that institutional capital is looking to acquire. So our sweet spot's really in the $5 to $15 million range. So if you think about an individual investor going out and buying a $5 million property, they're probably going to need $1.5 million of equity to acquire that property. There's just not a whole lot of people that have that kind of liquidity to invest in a deal. Right. But now, if we say, hey, we're willing to take as little as a $50,000 investment in this opportunity, we found it first. We found a good quality high-level property. We're going to property manage it ourselves. We're going to negotiate lease terms. We're going to handle all of the capital improvements and things like that. So we make it a very passive investment for folks. And again, one of the differences is a lot of syndicators and other fund managers are requiring $250,000 minimum check size to invest in their projects. So we decided we wanted to start smaller than that and allow people to get exposure to us, kind of dip their toe in, so to speak, and do $50,000. So we're on the lower end of the entry point to that. Our average investor last year was about $325,000 across our portfolio in total, but a lot of folks may have put $50,000 in 6 or 7 deals or 8 deals that we did last year. So it gives an entry point and allows you to become familiar with the process and what to expect from a communication cadence and how the property works. So that's really where we feel like we've separated ourselves or created a little bit of a specialty for ourselves in regards to the types of properties that we're acquiring. And with the brokerage business being in-house, so to speak, or us being a part of a traditional brokerage business, we're finding a lot of opportunities prior to them ever hitting the market, or brokers have transacted business with us in the past and they know that we're good communicators. They know that we're fair. They know that we can get a deal done. And so we're getting a lot of calls prior to other people getting access. And one of the guys in our company likes to say that real estate is really the only business where kind of insider trading or getting information before somebody else has access to it is celebrated and not frowned upon. And I think that's really one of the things that has allowed us to be successful. Of the 8 deals we did last year, at least half of them were off-market or proactive calls that we were able to secure without it being exposed to the public, which allows us to negotiate more favorable terms. If we're not competing with 10 other offers, we can typically secure better pricing and better structure on the projects.
Well, I want you to take this a step further because I have another question here, but what you've started it. You started saying that you like to be able to put your hands on the property, but what other features does Linville Team Partners, what sets you apart from other syndication groups? Yeah, so keep building on what you were just saying, because that was really good.
Absolutely. I think one of the things, our combined experience from the brokerage side, from the commercial finance side, from the property management side, we have the whole bundle under one roof, so to speak, which allows us to vet the deal, use our brokerage experience to negotiate the terms, use our finance background to underwrite and analyze the deal. We've been able to leverage banking relationships to get better than market terms on financing, which get passed directly through to our investors. And again, being selective in the markets we're pursuing, which are North Carolina, South Carolina, Virginia, primarily, that we know those markets, we have broker relationships in those markets. So if we have a property, for instance, let's say a tenant rolls out unexpectedly, we're not just chasing to find a random broker in that market. We've already got established relationships with people that have market knowledge, that have tenant relationships, that can help us backfill those locations with quality tenants, hopefully quicker than otherwise we would be, stuck with in a situation where we're in a market we don't really have any familiarity or exposure to. Or you don't want the surprise of, well, hey, it's a $15 a foot rental market in North Carolina, so we assume that would be the case in Texas, and you get to Texas and it's an $8 a foot rental. We're not going to buy in markets we just don't understand. So I think that's a big part of it as well. Is we're playing in a sandbox that we're very, very familiar with, that we know how to maneuver and be efficient to work through.
Well, I really like that you have all these different areas of expertise in-house, because I know many investors who are the GP general partner, and they are then just trying to do everything on their own and pull the money together and do the syndication deal. And that's where a lot of errors happen, where they really don't have the understanding of it because they're trying to keep it in-house so that they have more profits for themselves. I'm assuming that's the reason why they don't expand and go beyond that. So I do really like that you have all of this brain power in-house, which is so important. So my question—
One other thing real quick before you go to the next question, I failed to mention this, that I think is a very important part and has been much appreciated by our investors as well, is the general partners, Nick, Aubrey, myself, Jacob, the folks here at our office that are putting these projects together. We are all personally investing our own dollars as LPs in each of these projects. So our dollars are at risk just like our other investors' dollars. So we're standing shoulder to shoulder, moving alongside of our investors. So I think that's been it's resonated well with folks that we're not just the finders and sourcers of deals. We are actually investors right beside of them. And so our dollars and returns are the same as their dollars and returns.
Huge. So let's talk about those dollars and returns. If there is a listener out there who has $50,000 they want to invest, what does it look like? How often are they paid interest on it? If you sell the property, like from start to finish, what does that look like for that $50,000 initial investment?
That's a great question. I'd be happy to walk through that. So most of what we are buying is roughly a 5-year hold period. Where I say draw a big circle around 5 years to allow us the flexibility to make a good decision on our investors' behalf of when the appropriate time to sell is. But 5 years is roughly what we're looking for. A lot of the properties we've bought have had 5-year leases or 7-year leases, and we want to be able to time either a renewal of a lease or finding a new tenant, et cetera. So first question a lot of people ask is, well, how long is my money going to be tied up?
Right.
Approximately 5 years. Could be 3.5, it could be 6.5, just based on the best time to exit and maximize returns. But once that $50,000 comes in the door and we deploy it and help fund the project with it, you will get paid a quarterly distribution, deal specific, but typically a 7%, call it interest on that. So 7% preferred return that's paid quarterly. And then every dollar of excess cash flow after that is typically split some 70-30, 75-25, somewhere in that neighborhood between the limited partner investors and the general partner, being Linville team as a sponsor, founder of the deal, all that stuff. Since we do have in-house property management, our property management team handles each and every one of the properties that we own. It's paid a market property management fee. So there's no like astronomical, because it's a sister company, they get twice what market rates is. It's always paid at market, which typically is going to be 3 to 5%, depending on the property type that it is.
Okay.
A multi-tenant shopping center, probably going to be 5%. A single tenant industrial deal may be as low as a 1.5% property management fee, just very market driven and property type driven. And so those are all paid out. That 7% preferred return gets paid out, 1.75% each quarter. The excess cash flow distribution, in theory, could be paid out each quarter. Sometimes we accrue that for 2 quarters and then pay 2 quarters worth twice a year. And then when the property is sold, after the cost to sell it, any excess profit that's left over at the end of the day, that's also split based on that original LP-GP split. So think 70-30. So if there's $100,000 of profit, $70,000 gets deployed back to the investor group and $30,000 gets deployed back to the general partner sponsorship group.
And they get their initial investment back as well.
Correct. What
Nice.
we are typically trying to solve for, Jen, is somewhere in a 14 to 16% IRR. And I know everybody has a different definition of return metrics and things like that.
What is IRR for the listeners?
Internal rate of return.
Thank you.
But at the end of the day, and what our marketing piece for each project that we put together shows is, some people want to know what their annual cash flow looks like. So that cash on cash is one way to look on that. And that's basically that 7% preferred return plus the amount of that excess cash flow distribution we talked about. So for every dollar of profit that gets split 70-30, the 7% plus that amount, what does that equate to? And normally that's going to be at least 8%, maybe 8.25%, 8.5%, somewhere in that range. So that's kind of the annual cash flow. So if you put $100,000 in, you could expect to get a return of roughly 8.5% on each of these deals each year, with the remainder of the profit coming on the exit. And we are very, very conservative on how we model. I think going back to your earlier question about how we differentiate ourselves from other sponsors, we have seen a lot of projects and a lot of syndicators put deals out there that have these pie in the sky exit prices. Hey, we bought it for $2 million and now we're going to sell it for $8 million, and that's how we make our money. We would much rather under promise and over deliver than over promise and under deliver. So we're extremely conservative in how we model our exit, but we, again, are trying to solve for something we think is realistic. It's merit based. It's not just wishful thinking. And at the end of the day, typically, so if you put in $50,000, we're trying to solve for getting an investor on exit in cumulative somewhere between let's call it $105,000 and $120,000.
Wow.
So your 50 would turn into somewhere between 105 and 120. So typically like a 2 times your equity multiple. So if you put in 50, 2 times would be 100. And we're trying to get the, somewhere north of 2 to 2.25 range on that. So again, different people look at return metrics, and there's several that we consider, but kind of IRR for the total project, your cash on cash looks at how much money you're getting each and every year that you are participating in it. And then that equity multiple is kind of a way to look at like, all right, I put originally in 50,000. At the end of the day, I got 100. I got twice, I returned twice my money. And again, different people prioritize which of those is most important to them.
You explained that so well, Michael. You are so good at this. So thank you for that. For the accredited investor that may possibly be listening right now, what is the best way for them to invest with you all? How does that process start?
So our ask of most people who are curious or interested in learning more about Linville Team and our investment platform is to get registered in our investor portal hosted through Avestor. And they can do that directly through our website. Our investment services portion of the website provides them a link and direct access to Avestor. And really the way we distribute opportunities is we've got about 70 active investors who have participated in projects with us. They get the first look. We're very loyal. We want to honor and show them appreciation for their current and existing investment alongside of us. So that group of 70 gets the first look. We typically give them about a week to make a decision on, hey, we'd like to participate or not. The next group that gets access to it is the folks that have registered in our investor portal but have not yet invested. So we've got another, call it 75 or so people who are in that band where they've signed up, they like Linville Team, they have interest in exploring opportunities. They just haven't pulled the trigger yet because they haven't been the right time or we haven't had the right opportunity for them. So we send it to that next 75 after we work through the first band of existing investors. And then really after that, we kind of open it up. And candidly, we haven't really gotten to the point we've had to open it up further beyond that. But the next step would be opening up to a wider network. So if somebody's not familiar with us and wants to learn more about us, our recommendation is to get linked to our investor portal, and that gets you access to opportunities as they come available.
And what is that website?
That is through Linville Team, is ltpcommercial.com. And through that, there's a drop down that shows the investment services division. And then there's a direct link to our Avestor portal from that website.
So that's Linville Team Partners. So LV, say it one more time.
LTP Commercial, as in Linville Team Partners, ltpcommercial.com.
Perfect. Well, this has been awesome. You are, again, so good at explaining this. And I do not doubt that you're going to start seeing some more investors checking you all out. But I'd like to move to the second part of the podcast here, which is what makes Michael Holshouser, said right, correct? Holshouser. What makes Michael Holshouser a badass, which you are. And I use the acronym BADASS, and the first letter is B for book. What is a book that's made a huge difference in your life? And I think you said that you were not an avid reader. Was that you?
It was.
It could be a podcast, whatever.
My wife and kids probably have read more books already in 2026 than I've read in the last 10 years, but it is what it is. I've got a lot of other interests outside of reading that keep me busy. But 2 books I would say that are hopefully appropriate and relevant to your audience. The first was Rich Dad Poor Dad. I'm sure a lot of your listeners are very familiar with that. And I think just the concept of money management and being willing to think outside the box maybe a little bit in how you invest your money and handle it, I think is a great, somebody that has not invested in real estate before or is trying to consider a career change, wanting more time flexibility or financial flexibility. I think that's a great resource and a great book to read. The other one that I would say stood out in my mind was one that the last bank I worked for encouraged all new employees to read, and it was called Indispensable. I believe Joe Calloway was the author of that book, and it really talks about your business not being, if it is a commodity, not letting price lead be your main point of competition, because if you do, it's a poor outcome. But it talked really about the service level, and for a lot of what we do in real estate is relationship driven, and so you think about how the service level goes along with building and maintaining relationships. That was a book that definitely stood out and made a memorable impact as well.
Very good. All right. The first A in Badass is for advice. You've given great advice on this podcast, but I'm curious, what's the best piece of advice you've ever received?
I would say that I've got two, and I think the first is very simple, and that's really just kind of follow the golden rule. Again, treat people the way you want to be treated. I've lived my life that way, tried to live my life that way, and it's never done me wrong, so to speak. So I think if you show kindness and treat people fairly, the majority of people will show kindness and treat you fairly in return. The second part of that is for people that, again, are looking to kind of make a career change or see their own personal financial situation improve. One thing my dad told me early on as a teenager was be careful who you surround yourself with, because you kind of are the average of your 5 closest friends.
Yep.
So I've tried to keep that in mind. And so as you're looking around yourself, if you're not in the place in life that you want to be, maybe it's a reflection of the people you're choosing to spend time and surround yourself with. So if you have access to people that are in a position in life that you want to closely align with or aspire to be in that position, you need to spend time around them and be willing to listen and be willing to ask questions from them and learn from them. I think that's one thing I've tried to always keep in mind, is to surround myself with people that are aspiring and helping lift me up and not bring me down.
Absolutely. And I will just give a little plug for myself here, Michael, if that's okay, because I run a mastermind called RAIN, and it is a perfect place because I had that struggle. I had a whole totally different group of friends when I got into real estate, and I quickly learned that I needed, instead of them pulling me down, I needed people to be reaching back and pulling me up along with them. So you all can check out RAIN Mastermind, and if you do need that support group, if you don't have it near you, we are a virtual group, but I normally don't plug any of my stuff, but that just was lobbing it because it just really hit home with me that you said that, because I really struggled with that in the beginning. So for me to do that, I created my own mastermind group, and I think it's very important. And plus the whole accountability thing too, because if you're around people who want to be successful, you've got having that little extra bit of accountability as well is going to just launch you even quicker. So thank you for giving me a second there to plug. And we're very cheap, by the way. We're only $29 a month right now. Maybe that's going to go up. It's not about money, a money maker. It's about the quality of people in that group. So, all right, enough about me, Michael. Back to you. The D in Badass is for drive. What drives you to be successful?
That is a great question. And I think as life has changed and evolved, that's one of the things that has also changed, is the drive. And I think I've got 2 boys that are 13 and 11, and I think providing for them opportunities that I didn't necessarily have growing up and having exposure to things, that's really now what drives me the most, is I don't ever want my kids to be spoiled. So it's a fine line and a balancing act, but I want them to have exposure to things that show them what the world can be and can open their eyes to opportunities that if you just kind of stay with your blinders on, that you don't always know is out there. So creating experiences for them and showing them things that are out there, and that the world is a great big place and there's endless opportunities. I think that's really, at this point in time, what's driving me the most.
I love those ages, by the way, 11 and 13. I taught middle school for 16 years, and that was my jam. I think I had the same mentality level as them. I was very immature, but I do love that age, and such a opportunity for growth as well. So I'm so glad you're doing that, Michael. Wonderful. All right. The second A in Badass is for aspiration. I'm a big goal setter. So what is a goal you are currently working on?
Yeah, I would say professionally, getting our investment services platform scaled is really my greatest aspiration right now professionally. We launched about 18 months ago and had a tremendous 2025, and we just want to continue to be able to build on that momentum, but in a way that is scalable and repeatable, and not just kind of be the dog chasing his tail out there. You got to be careful what you catch sometimes. Personally, I will share, I've started playing golf when I was 10 years old, and love to play golf. Don't get to play as much as I'd like to, but love to play golf. I am hoping to shoot a certain score this year at the golf course that I play at regularly. And so that's my personal goal for this year, is to set a new personal best out there on the golf course.
Well, I have never played golf in my life, but I did play beer golf in college, and I won it. Just saying, for the Tridelts at the University of Central Florida, that plaque in the back there, my name was first on it. So
Love it.
played beer golf. Anyway. All right. The first S in badass is for systems. What systems do you have in place to help you achieve success?
This is something kind of going back to your question or conversation earlier about somebody that's starting to want to invest in multifamily and some of the things that go along with that and needing a team around you. I've really got to give a lot of credit to our shared services team here at Linville Team Partners. They help multiple lines of business within the firm, and they handle all the things around marketing, investor relations, event planning. And they really allow me to focus on continuing to build relationships and be focused on the revenue generation side of the business versus all on the operational side of the house, which are equally important, but we have a great team in place that helps ensure that the operational side of things is well taken care of.
Very good. I love when people shout out the rest of their team. So thank you for that.
It is a total team effort here. And that was one of the things that drew me. And I've really enjoyed having that family kind of dynamic, and everybody's pulling for each other, and it goes a long way.
Awesome. Well, I could talk to you all day, especially since we are neighbors, but the final S in badass is for success. What does success mean to Michael Holshouser?
I think success today is, simply put, for me, happiness. And when I say happiness, I think there's a lot of ways that we can think about happiness. For some people, it's the physical or tangible symbols of success. In my mind, those are kind of short-term accomplishments and don't typically provide long-term fulfillment. So the old expression of finding something you love and you'll never work a day in your life, I think applies a lot. And so I'm working with people I love and enjoy their company. I love what I'm doing. And so having happiness around the day-to-day interactions, and I think that's really the ultimate sign of success, is finding something you can do that's going to make you happy, personally and professionally.
Well, I think it's, I think it's very evident in the way you explain things. You can tell you're passionate about it, and you're always reaching back and pulling people up along with you. So Michael, this has been such a great interview. You explained things again so well. So thank you for making it very easy to understand. And one more time before we go, how do the listeners find this portal to start learning more about it and become an accredited investor with your company?
Yeah. Right. Jen, thank you so much. I really appreciate the opportunity to be on here with you and have enjoyed the conversation as well. If any of your listeners are interested in learning more about the Linville Team Partners and what we're doing, they can go to our website, which is LTP, as in Linville Team Partners, commercial.com. They can find my contact information on there as well. You can email me directly, michael@ltpcommercial.com. And would love to have a conversation, can share some of our previous projects that we worked on as an example of what we're doing with this investment services platform. So really enjoyed our time together.
Absolutely. Thank you so much, Michael. And that is all. Thank you for listening. We will catch you on the next episode. Now go out there and share your badassery. And don't forget, make it a great day. Take care. Bye-bye. Whoop, whoop.
Thank you for listening to RAIN, the Real Estate Investor Growth Network. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. If you need more badassery, you can follow Jen Josey by visiting therealjenjosey.com or become a member of RAIN by registering on rainmastermind.com.